Good morning, good morning, good morning. Listen, I know today I am here earlier. I did talk about that. I did say that last week. I said this week I start at 7:30 a.m. New York time. So I know it might be early, very early for a lot of people, but it is the time that it works best for me. So if I want to show up consistently, I need to be able to do this, right? So I just have to do it earlier. So yes, I hope y'all had a great weekend. Most likely you're going to see this video afterwards. You're going to see it maybe around 8:30, 9, after the live, but that's okay. We're going to start now and eventually, you guys either are able to make it. If not, you're going to be able to see the video afterwards, the video on demand, and we're committed. We're committed. I'm making the changes necessary in order for me to be able to do this consistently so that I could create value consistently. So yeah, 8:30 to 9, it was just a little bit how can I say this? It was just not a good time for me. It was a little bit uncomfortable just because of everything else that I have going on. But we are dedicated. We're gonna continue teaching. We're gonna continue. Of course, I'm gonna continue trading after 9, but it was just a lot doing YouTube, then trading. Obviously, I have a son, a toddler. I got my job too. So yeah, we gotta do what works. So today we are going over again the Candlestick Trading Bible. We're gonna keep going over it until we finish it. That's what we are gonna do. And last time, like the last video last week on Friday, we were talking about the ranging market, sideways market, and we already finished that. We went over that. If you haven't watched it, go to the playlist that I have on my channel about the Candlestick Trading Bible, and you're gonna see it there. So we already finished that, and today we are talking about time frames and top-down analysis. That's what we're gonna be going over today, and this is a little bit lengthy, so I'm gonna try to get through it as fast as possible without like missing anything important. Now, one moment. Okay, so, and as you can see on the top right, I think it should be the top right. That's what it looks like on the top right. Actually, yes, on the top right of the screen, you're gonna see how many subs we have on the channel. The goal is to hit 500, to reach 500. That's the milestone that we're working towards hitting. So if you have not subscribed, definitely subscribe, like the video when you watch it, so that YouTube just shares it with everybody, right? Everybody. Here we go. Okay, time frames and top-down analysis. So I'm gonna be reading and giving my input, my insight, and also when we can go to the chart, we're gonna go to the chart. Okay, so as a price action trader, your primary time frame is the 1 hour and the 4 hour and the daily. So I'll start by saying this. Top down analysis, there's many ways that you could do this, and we are going to definitely see what the book has to say. We're going to see what the book has to say. Now, ultimately, you use top down analysis in a way that it makes sense to you, in a way that you understand it. For me, those are not my primary time frames. I take my entry off the 5-minute time frame, and if I had to pick one of these, did I close it? Hold on, it looks like I closed it somehow. That is so weird. Oh, there it is. Just gotta get down to the page. Okay, if I had to pick one of these time frames, I will pick the 1 hour to be really my primary time frame. If I had to pick one, just because it makes the most sense to me. And now I have somebody here inviting me to chat. This is on Let's see. This is on Reddit. Okay, let me actually give them the link here. Okay. All right, so we might have Harvey. We might have Harvey come join us. He just sent me a message. I just sent him the link. So I'll continue. Harvey, if you join, I'm going to be looking at the comments, making sure I don't miss you. So, okay. So as a price action trader, your primary time frame is the 1 hour, the 4 hour, and the daily. And yes, and I actually do agree that we should have this here in our time frames. So I do have the 1 hour, the 4 hour, and the daily. Yes, I do agree because I have them here. Now for me, the 1 hour is just the strongest one. The 1 hour is the time frame that makes the most sense for me to analyze. And of course, I do start from the weekly. I work my way down. And Harvey, if you're here, let me know in the comments. Let me know if you're here. Right now I'm going over the Candlestick Trading Bible. If you don't have this book, if you haven't heard about it, it is free. I'll send you the link right now. This is perfect for beginners, perfect for people that don't know anything about trading. This is perfect. It literally tells you, like, it'll start from teaching you how to read a candle, and it just takes you all the way down. Right now we are on page 70, time frames and top down analysis. And I do have a playlist here on this channel, and I'll show it to you. But let me do this. I'm going to send you the link. I just sent you the link right there. Click on that link, bookmark it, because that's a great resource for a beginner. And at the same time, I do have a playlist on this channel where literally I have been going through this book. I have been going through this book pretty much every day, Monday through Friday. I do live stream, and I've been going through this book through every part, every section, every chapter. And I have a playlist here on my channel, so let me show it to you. So if you go to my channel, first of all, go ahead and subscribe. Make sure that you get the value that's here. Make sure that you don't miss anything. So there is a playlist. Go to my playlist here. Like, you could go to my channel here, the playlist, and right here, the Candlestick Trading Bible. We have 17 videos. Literally, I started from the top. I'm working my way through it, and this is the playlist that you want. Let me actually get the link for you for this playlist. Okay, here's the link. Share. Okay, I'm gonna share it here in case Harvey is here, in case Harvey comes around. I know it's mad early, but again, as I was saying, it is what works for me to be able to stay here consistently. My goal is to be consistent. So, hey Vashi, happy Monday. How you doing? Oh, you say you got a little stomach bug, but I'm here. I hope you feel better soon. And yes, I know that's horrible. Like, when I go through that, it's bad. But yes, I hope you feel better soon. And I would understand if you're here on and off. I would understand it. So yes, I hope you're feeling better soon. So all right, I just shared the playlist for Harvey and anybody that may be joining that don't know about the playlist. But we'll continue here. Okay, so we are talking about time frames and top down analysis, and we read this first line. So as a price action trader, your primary time frame is the 1 hour, the 4 hour, and the daily. And as I was saying, I do have them all here. So now notice that it's not saying that this is where you take an entry. So I don't disagree with this line, because it's not saying that that's where you take an entry. So these are definitely ones that you want to have at least. I do have the weekly as well, but that's just more for context. So price action works on bigger time frames. If you try to trade pin bars or engulfing bars on the 5-minute time frame, you will lose your money because there is a lot of noise on smaller time frames, and the market will generate a lot of false signals because of the hard battle between bears and bulls. I agree and disagree with this. I would say I would replace the 5-minute for the 1-minute. I actually do think that, yes, while there are fake outs on the 5-minute, while there is noise in the 5-minute, it doesn't compare to the 1-minute. Like on the 1-minute, if you try to trade pin bars or engulfing bars, I could agree, like you will lose your money. But on the 5-minute, yeah, no, I don't agree with that. Not on the 5-minute. And you have the right to agree or disagree with knowledge that you come across, because at the end of the day, this is written by men. This is written by somebody else. So, and of course, they could have great results, and that still doesn't mean that you have to agree to everything. I don't agree with this. If he said the 1-minute, yes. And why don't I agree? Because I've seen the pin bars. Oh, hold on. I think I have this on. Okay. I've seen the pin bars. I've seen engulfing bars on the 5-minute. And as long as you have the right confluences, it works. You can't just say that you will lose your money, because you will lose your money if you don't know what you're doing. That I would agree with. If you don't have your confluences right, if you don't know what you're doing, yes, you will lose your money. But is there a lot of noise on the smaller time frames? I'll say this: there is noise in the higher time frames, and the noise in the higher time frames comes in this form. I'm gonna show you now. I'm gonna show you how this is noise. For example, this right here. This is how, and it's not that I'm like mad at the book, but I'm gonna show you, like, you can't say that there is no noise. Like, yes, okay, this looks clear. For example, you see a demand setup right here. There's a demand setup. Oh, and Vashi, by the way, in the course, I think I did a better job of explaining the gap. So just definitely, I will say, if you watch the course, it should be coming out today, definitely at the latest by tomorrow. Definitely at least watch the section on supply, demand, and the gap, and I hope it makes more sense. So okay, so here we have a demand setup. Technically this wouldn't be noise, right? Because we see the market here reacting, turning bullish, and then in theory we should see it go up. But where's the noise here? Like, you know, where's the noise? Yes, on the higher time frames. Like, what counts as noise here? Well, for me, it's not the candles themselves that count as noise necessarily. Is this time. I want to tell you why. Because right now it looks like it's turning bullish, but it has 9 hours. So right now you may think, oh, you know, in the lower time frames we are bullish. This is the daily, or even if it was in the weekly, oh, we are bullish. That means that I should be looking for buys. But what you don't realize is that in 9 hours, this is going to have pullbacks. Like, literally, price is going to do this. Like, I don't know if you're looking at my mouse, but even this right here, this is noise. Why is it noise? Because the candle looks like it's bullish, but this little pullbacks, even if it stays bullish on the higher time frame, that will be bearish on the lower time frames. That right there, those pullbacks go against this bullish candle in the lower time frame. So for me, this time, like having 9 hours, that's noise. Like, I don't know if that makes sense to y'all. I know that might be different, that might be controversial, that might be like, or for some people it might make sense, because in 9 hours, listen, in 9 hours this could turn bearish, then it could, and then the last hour it could turn bullish. That's noise. I think there is noise everywhere in the market. The only difference is that noise either gets faster or slower. I do think that the noise in the higher time frames, it is slower. It's usually slower. The lower you go, the faster that noise gets. That's just how I see it. I'm not saying that's a technical thing. I'm not saying, even the book doesn't really talk about it that way, but I'm just talking from experience, from what I have seen in the market. So this part, you could definitely at least consider it. I'm considering it, right? I consider it, and I do agree that there is, hold on. Oh, sorry, I didn't want to cough in your ear. Let me read the comments real quick. Okay, cool. I will study that ASAP. Thanks. And yes, as soon as it comes out, I'm going to announce it on the Discord. I will announce it. So you're going to see it. You're going to get a notification. And plus, that candle looks like an indecision doji. Yes. So we got to know how to read the candles to help with confluence. Yep, I agree. I agree 100%. Going here. That's still... pretty much all of this still is dojis, you know, it's still indecision. So, and then you have 9 hours. So I will say I do agree with mainly one part. I do agree with the false signals. The 5 minute does generate a lot of false signals, and but so does everything else. Like, I don't think there's anything on the higher time frames. Like, yes, it gives you context, but the timing then gets messed up. That's the only thing. Like, yes, here we could assume that it's gonna go up at some point, but look, this is the daily. So the question is, in how many days is it gonna make that move? You see what I'm saying? It's gonna take days most likely to make that move. Are you gonna wait days? Like, so I agree and disagree at the same time, and that's okay. And you could disagree with me, and that's 100% okay. That's what makes you a trader. Like, you being able to think for yourself is what's going to give you an edge in the market. You can't like trade, you know, with somebody else's mind. You could have their framework, but at the end of the day, you have to use your own mind. Okay, besides, there is no successful price action trader who focuses on one time frame. And now, here we go, on one time frame to analyze his charts. Maybe you have heard of the term top-down analysis, which means to begin with bigger time frames to get the bigger picture, and then to switch to the smaller one to decide whether to buy or sell the market. This, I agree 100%. You have to read the higher time frames for context. In that story, you got to get that context. You have to get, you know, where you're at in the market. You have to understand where the story is going. You know, you do have to understand that before you take an entry on the smaller time frames, like the 15-minute, 5-minute, or 1 minute. I agree 100% with this part. Okay. Yes, and you don't want to like get in on like the 1 hour, the 4 hour, or the daily unless you are a swing trader. If you are a swing trader, by any means, go to the 1-4 daily, weekly, like. Yeah, I mean, on the weekly, you might just be an investor at that point. I don't even think you're a trader on the weekly time frame, but at least in these three right here, maybe the daily almost gets to investor status. I would say definitely the 1 and the 4 is more of a swing trader. One and the 4. And now, real quick, we have 4 people watching. I know it's early, but you guys did connect. So go ahead and like the video, please, so that YouTube just continues to present it to other people that may be live right now looking for, and when I say live, it's just they might be actively looking for trading content at this moment. So I do thank you guys for joining me early. Like I said, moving forward, it's going to be 7:30 to 8 o'clock. Again, it's just what works best for me to be able to be here consistently. 8:30 to 9, and usually I will go a little bit over, but 8:30 is just not sustainable for me, and I'm making moves that I'm trying to put myself in a position where I could be where I could do things that are sustainable. 7:30 to 8 is sustainable. I don't have a problem with that. It doesn't interfere with anything else that I have going on. So yes, I do thank you guys for joining in. Good morning, my man's DQ. Good morning, bro. Good morning. You made it, bro. Yeah, like I was saying, yeah, 7:30 to 8 moving forward. The good thing is I do not get rid of the videos, the live streams. I don't care what happens during the live stream. I'm not getting rid of it. I'm not editing. Like, I'm leaving it there for you guys. So if you don't make it on time, that's okay. You could watch the replay. But of course, if you guys get here on time, you could ask questions. So, okay, we're going to continue. We're talking about time frames and top-down analysis. And I went through this part. I'm going to try to get through this quicker now because we do have quite a bit. So, okay, so, here, let's say you want to trade the 4-hour chart. You have to look at the weekly chart first. and then the daily chart. If the weekly and the daily charts analysis align with the 4-hour chart, you can then take your trading decision. Long story short, you always have to go up in time frames before you take your entry on the lower time frame. Go up to come back down. Start going up. That way you understand where you're at in the market. That's why you want to look at these time frames. Like what he's saying, for example, if I want to take an entry on the 1-hour time frame, I have to look up here. At least at a very minimum, I have to look at the 4-hour. And if you don't have it like this, click here and you're gonna see the time frame starting with the minutes. Like for these smaller ones, you have to pay for access to that. But I wouldn't even recommend getting the seconds, because I mean, it's so much noise. But definitely I would say start with the 5 minute. You see 15 minute. I'm just putting I put a star next to it. That way, when you put a star, when you make it a favorite, it shows up here. So now if you took an entry on the daily, then you have to look at the weekly. And do we have something higher than the weekly? Yeah, month, 3 months, 6 months. So for example, if you took an entry on the monthly, which at that point you're definitely an investor, then you have to look at the 3 months and 6 months. That's what this is saying right here. You just have to look at the higher time frames to take an entry on the lower time frames. And if you want to trade the 1-hour chart, you have to look at the daily chart first. This is a critical step to do as a price action trader, because this will help you avoid low probability trading setups, and it will allow you to stay focused on high probability price action signals. For me, this is what I do. Listen, so I trade off the 5 at the very minimum, even though I go through all of them, usually weekly, daily, 4-hour. At a very minimum, I have to look at the 1-hour to make sure that I'm not trading against it. For example, if I'm looking at buys on the 5 minute, or like right now, the market, it looks like it's going down. Let's just say that I'm looking to sell here. I gotta look at the 1-hour to see if I should not, if there is a reason for me not to sell. For example, the market is dropping. I do see a demand setup here. And don't worry about, like, if you don't understand demand, supply and demand, that's okay. The course is coming out between today and tomorrow. Why can't I tell you for sure? Because I do have to upload everything. I do gotta get some images ready and everything for I gotta submit it to Udemy, and I'm probably gonna have like a private playlist where the people in my Discord could just have access to it that way. So yes, I don't know how long that's gonna take, but definitely it's gonna be out by tomorrow. Like, yeah, you know what, let me, I gotta show you real quick. Look, like it's all done. Like section 1, and I gotta fix that. Hold on. See, I do everything in real time here. The welcome here. Welcome, trading fundamentals, like it's all here. Reading price charts like a pro, introduction to the futures market, introduction to supply and demand, and the course wrap up. So like, look, I have all of the videos. I just have to upload now. I have to upload everything. So everything is here. I got it all wrapped up. So yeah, it's there. But all right, so I was saying, if I wanted to sell on the 5 minute, I have to see if I have to make sure I'm not trading against the higher time frame. So here it does look like the market has room to sell. Like it has at least all the way to here. So okay, I know I'm not trading against the 1-hour. Let's look at the 15. Now the 15 has support here. So I'm not going against it, but I don't have too much room. So I know I could at least target these right here, these lows. So I may still have space. Now let's look at the 5. If I was to sell here, do I have at least a 1-to-1? Okay. So here, DQ, I know you were asking about this, about the knowing the risk, the ratio. Look at this. I use this tool. First, you got to know where your entry's at. Let's just say that this is where you're going to enter. Let's say you're going to enter at 65.21. You put the stop loss. You could put it right above the candle. I'm selling right now, so right above. And then the ratio, I start with a 1-to-1. That's my first target. So technically, yes, I have space. Like, I could sell, and this would be my take profit. My take profit would be 65.10. That will be the take profit. And technically, I'm not going against any of the higher time frames. I can sell. I'm just showing y'all this because this is how you use the higher time frames. You just make sure you're not trading against any of them. Now, this might be a little bit more advanced right now. That's okay. Just everybody that finds this advanced, which it is, it's more advanced, definitely make sure you go through the course as soon as it comes out. Make sure you go through it. It shouldn't take more than, like, honestly, a week, right? It shouldn't take more than a week. I don't think so. Some of the videos are a little bit lengthier, but overall it's not a huge course. So, and by the way, when you guys get through the course, let me know if it helped you. I think it will. I mean, I did my best. I like just going super, foundational. So let me know if it helped you, if I explained things correctly, not correctly, but like in an easy way to digest. And let me know if you want a part 2. Let me know if you want me to go even deeper. But this course is meant to really get you to understand everything that I talk about. That's really what it is for. So you understand everything I talk about on YouTube, and so that you understand everything that everyone talks about on the Discord. So, all right. So again, what I was showing y'all is how the basics as to how we use these higher time frames. We just want to make sure we're not trading against the time frames. That's it. Like, as of right now, and you could even put that on the comment section. So DQ says yes, yeah, I'm lost on how to buy or sell. I've been trying to practice, but I'm still a little lost. Bro, I get that. Like, that's okay. I was lost too, but don't worry about it. Just watch the course when it comes out. We're gonna meet. We already spoke about it. When we meet, obviously, you can ask me all of the questions. I'm gonna help you on the spot. But definitely, I think watching the course, getting ready for our meeting, that's gonna be great. It's gonna help you. Remember, all this stuff that I talk about here, I did not understand any of it when I started in 2023. I didn't understand any of it. I had a mentor, and I actually watched a course, a Forex course that gave me the foundation. And then I had a mentor. With the mentor, I understood the high level stuff, the deeper stuff, and I asked questions too. Like, we used to have webinars, and I used to ask him questions, and he helped me with a lot of this stuff. So don't worry about it, bro. Where you're at right now in your journey, that's totally normal. Not knowing how to buy, how to sell, that's normal. Do not get discouraged. I got you, bro. Like, I'm telling you, I got you. Don't worry about it. And yes, and Vashi is telling DQ. She said we all go through that phase, DQ. It will click for you real soon, no doubt. We all been there, bro. Like, we got you. We're not gonna let you like not understand things. You're gonna understand it, bro. Trust me. So, and I will tell you this: you might watch the course, and I think after the course, a lot of things will make sense. But then you're gonna be like, hold up. In the meeting, I know you're gonna have a lot of questions, because I mean the course was meant not to like leave you with more questions, but to leave you wanting to even know more. That's really it. So, but all of the basics are covered. Okay, so through our top-down analysis, we always start with a bigger time frame, and we look to gather the following information. Number one, the most important support and resistance levels, right? I'm not going to read through it yet. I'm just going to talk about, the points here. Hold on. Okay. So when you're doing the top-down analysis and you're looking at the bigger time frames, what you're looking to understand is the most important support and resistance levels, the market structure, the previous candle, the market condition, and what are the most important key levels on the 4-hour or the daily time frame, and price action signal. So let me see what else he talks about here. Okay, I'm quickly gonna go through this, and it looks like tomorrow we're gonna have to do part 2 because it does have a lot here. So I'll go quickly through this. Tomorrow I'll go into it with even more detail, but you're looking at the most important support and resistance levels in the higher time frame. So these are areas that represent turning points in the market. If you can identify them on the weekly chart, you will know what is going to happen when the price approaches these levels on the 4-hour chart. So you will decide either to buy or sell, or to ignore the signals you get from the market. That's one thing you're looking. And you know what, I'm not gonna do a disservice to you guys. I'm gonna go through this one, and then tomorrow we pick up the market structure. We'll go through these ones because I definitely have input inside on each one. So we're gonna start here, and this is where we're gonna end. Definitely ask your questions now, because as I'm going through this, I will look at the questions and I will answer. I will definitely answer. So good morning Elias, good morning, how you doing, how you feeling? Okay, so it's saying you're looking for support and resistance where? It says on the weekly chart. So let's do that right now. Weekly chart. Okay, look at this, support and resistance on the weekly chart. There is so the major levels are here and at this point here, and if you want you could even say this level right there. That's on the weekly time frame. So right now the market still has room to go down. It could cover all of this right here. All of this it could cover. So the market could still sell to all of this right here, all this area or that region. We're looking at oil futures. Okay, so it's saying you will know what is going to happen when price approaches these levels on a 4-hour chart. So again, it could go down, it could approach it, and what it's saying is that once it gets here, you know what's likely to happen. So what happened last time? Look at this. This is what happened last time when the market approached those levels. The market went up. So when the market approaches 59.61, it is more likely to go up. So if we go down to the 4-hour, at this point we're looking for an entry around 59.61. When it gets down here, this is pretty much what it's saying. Once it's around 59.61, we're gonna look. Now I will say you should wait for your strategy. For me, I trade supply and demand. So for example, I will have to wait for a demand setup around here, right? Demand setup. It goes up from here, comes back down, and now I enter the market. So for me, it might be something like this. It might look like this. And a bonus thing. So I will wait for my setup, I will take my entry, and as a bonus thing, and now that's the 4-hour. I wouldn't get in on the 4-hour, but if I did, because this is in agreement with the weekly chart, my runner, I would actually target higher levels of risk to reward. So the stop loss, I will have it the same there, and maybe I target 1, 2, 3, 1, 2, 3 risk to reward. All right, I didn't get it perfect, but 3.01. I will put my stop loss at break even. This is for the runner, and I will let the runner target these higher levels on the take profit. So now again, this might be more advanced, but for those that know, those that understand a little bit more, I hope this makes sense. Like, all I'm saying is that once the market gets to this level, this 59.61, which is support here on the weekly time frame, you don't just get in. Like, you don't just say, oh, I'm getting in here just because we're at 59.61. No, now you still have to wait for your setup. Now for me, let's say it could have happened here, or it could have happened above. Like, it could have happened here, it could have happened here. Wherever it happened, or wherever it happens, that's where I'm taking it. And that's pretty much what I'm saying. Wherever it happens, that's where I'm taking it. Okay, so is it kind of like the same as looking for past reversal turnaround points to determine where future price action might probably go? Yes, because you're looking at the weekly, right? You're starting at the weekly and you're looking for support. And that support is where, so for example here, that support is where the market, you see, it could turn around because price usually won't go past that level. So yes, you are looking for the market to turn around there and take a setup in the opposite direction. For example, I could look for the market to turn around there. I can't force it. So that's why I said you have to wait for your setup. You have to wait for confluences. But if you're getting your setup after you have all of the confluences, most likely the market will reverse at that point. You see, like even here, this is another support, another level of support. You see, that's another place where the market could turn around. For me, I would then have to go to the 5-minute. Now, I will work my way down. I don't just do the weekly and go jump to the 5. I don't do that. But, after working my way down, for example, 63.85 is another level where I could expect the market to turn around. But I will have to wait again for my setup to happen after confluences. Maybe it happens here, maybe it happens here, maybe it happens here after turning around, like after doing this. If it happens here, boom, I'm taking it. If it happens here and I missed the first one, I could take this one. If it happens here and I didn't take the first two, this is another spot where I could get in. I don't know, this might be a list. So you said I see it, and the wicks to the left shows that, the turnaround area. Yes, wicks are rejection. You guys hear me say that all the time. So yes, the wicks show that whenever you have a bunch of wicks like this, that's support. Look, this is support right here. This whole area is support. Now, these are wicks, but they're going up, so it's not a single support area. Unless you want to look at this, like, break, retest. If the retest failed and it just continue going up. But like here, this is support. Look, I'm gonna show you all a bunch of different support areas. Some of them don't last very long, but it's still support. Whether it lasts long or not, if you're getting a few rejections or a few candles turning around at that point, this is support. You see, this is support right here. Then he broke, retest, the retest failed, and he continued going up. Other levels of support, like right here. Support. 1, 2, 3. We got 3 rejections there. That's support. And support, I mean, this one went down, but then we started getting rejections. So yes, we want to look left. We want to look at what happened. We want to look at what the story is telling us, what happened, right? And but we want to use every single time frame. That's what it boils down to. You want to look for areas of support, resistance in all of these time frames, but ultimately you're doing that so that you don't trade against the higher time frames. I look for support and resistance, and you guys know, those who have been watching me for a little while, you know that I don't just look for support and resistance, but I look for full-blown rejection areas, and which is, I guess you could look at it as the same. So let's just keep it simple. I look for support and resistance, and as I'm going down, I look for supply and demand areas. So that's what I'm doing, support and resistance, and then supply and demand areas, and I keep doing that all the way down. So when I take my entry on the 5-minute, I'm not trading against a setup on the higher time frame. I know anybody starting out, that's not going to make too much sense right now. That's okay. Get through the course, which is going to be available on my Discord server and on udemy.com. That's going to be available in both places. So definitely go through that first. Practice everything that we're talking about. Practice it. Tomorrow we're gonna continue talking about. We're just gonna go to the next one. So the market structure, and I'll talk about each one because this this section, it is a little bit lengthy. So I'm not gonna try to cram it into one live stream. So any questions before I go? Oh, 1-to-1. Let me see. Hold on. Quick question. So the average ratios is 1.0 or 1-to-1, and Vashi has said. Okay, I see it, and the wicks to the left shows that turnaround area. Yes, 1-to-1. DQ, yes, the way that I trade and the way that I learn how to trade, the first target is a 1-to-1. You risk $1 to make $1. Online on YouTube, you're gonna get a lot of people telling you that 1-to-1s is stupid, 1-to-1s is ridiculous. Like, you're gonna get all of that, right? Yes, I'm gonna tell you right now, they're gonna knock it. They're gonna tell you to go for a 1-to-2, 1-to-3. Usually they say 1-to-3 or higher. Like, risk $1 to make $3. The problem with that is that the market doesn't move like that all the time. It's very hard to get a 1-to-3 risk to reward ratio. For example, if you bought here, let's say like around here, you get in, with the stop loss. Let's just say like right down here. Look, a 1-to-1, the market gets there. Like, pretty much, and here, this is like a consolidation area, but it got there. It got to a 1-to-1. But if you go for a 1-to-3, look at this. How likely is it that the market is going to give you a 1-to-3 consistently? Look at that. Like, it's harder for the market to do that for you. So if you just go for the 1-to-1s, the base hits, you could build consistency. Now, the thing is this. The trick is that I don't just trade 1-to-1s. I do have my 1-to-1, but I also use a runner. So I trade with 2 contracts. The first contract, I close it when the market gets here to 1-to-1. But the contract that's available afterwards, that contract, I let it go for a higher risk to reward ratio, starting at 1-to-2. The stop loss, I actually bring it up. I'll bring it up to a little bit above break even. I'll bring it up to like about here. Why? Because if the market doesn't reach that 1-to-2 and it comes back, when it stops me out in profit. Yes, I don't make much, but I don't lose money to fees, like the broker fees. Now, you could always bring up the stop loss wherever you want. If you get it too close, the problem is that the market might do this. The market, let's say, is going up. It'll stop you out, and then you'll hit take profit. So I don't put it too close. But the runner is really what's going for those higher risk to reward ratios. I use the 1-to-1s for consistency, to consistently get wins in the market, and the runner goes for the higher risk to reward ratio, so I could actually squeeze out more out of my trades, out of my wins. So I would say start with a 1-to-1 for now. If you start doing 1-to-2s, 1-to-3s, you might get discouraged, because imagine this. Psychologically, is it easier to stay trading if you're winning, let's say 3 out of 5 trades, or let's say 4, 5, 6, let's just say 6 out of 10 trades doing 1-to-1s, versus you're winning 2 out of 10. Let's just say 2 out of 10 trades going for 1-to-3, maybe 3 out of 10. So imagine you lost literally 7 times in a row. You may not even have confidence that, or 6 times in a row, that's 7th time, 8th time, or yes, actually 7, that's 7th time. The 8th time, you're not going to have confidence, most likely. The 9th time, you probably still don't have confidence. So 1-to-1s are really good psychologically. They help you do base hits in the market, and it's just easier to win. We want to win, and this is how we squeeze more out of our trades with a runner. So, okay, yep, you said gotcha. And again, go through the course, and trust me, you're gonna see me taking trades on Discord. You're gonna see me taking these trades. You guys are gonna see me as literally. When I trade live on Discord, you're gonna see how all of this comes together. You're gonna be able to ask questions. I'm gonna be in the same channel trading, this live stream channel. So just go to this live stream here, live stream channel, and just literally you're gonna see me taking trades. I'm gonna talk about my trades. I'm gonna answer questions. You're gonna see me closing profit like at 1-to-1, and you're gonna see how I handle the runner. You're gonna see all of that. And I'm gonna let y'all know when I'm trading. I'm gonna send a message here, like I'm gonna let y'all know, like, okay, I'm about to hop on stream. I'm about to take this trade, and you guys are gonna see that. So, any other questions before I go? Any other questions? Which, by the way, okay, DQ says, yeah, 1-to-1 makes sense. Perfect. And again, bro, you're gonna see that online. Online, they're gonna bash it. But I actually learned this. My mentor literally was making a lot of money, and I saw this. I saw him streaming live all the time, like streaming live the setups or taking his setups literally all the time. And I was taking setups with him at first, just like most people. You gotta learn first from somebody. I was taking the 1-to-1s, and they was winning a lot more often. So I saw it, I experienced it, I took my own trades. Like I know. So, but again, when other people discourage that online, just take it with a grain of salt. At the end of the day, you're gonna have to put in your own work. At first, yes, you might trade with us, but eventually you're gonna do your own work, and you're gonna see what works for you and what doesn't. So Vashi says, great life, appreciate it. Thank you all for joining. I know I'm coming in earlier. Again, it's because I do have to work. I have my toddler, and I want to trade by 9:30, right? I can't just be like streaming from like 8:30 to 9:30 and then trade, and it just takes a big chunk out of my day. So I'm just gonna be streaming every day again from 7:30 a.m. to 8. I know I went over today, but 7:30 a.m. New York time. Tonight I'll be streaming in Spanish at 7 p.m. So tonight's stream is in Spanish, 7 p.m. I know some of you join sometimes, so if you guys join, you guys definitely are welcome to do that. And that's it. I don't have anything else. If you guys have any questions, hit me up on Discord. I will be on Discord. Hit me up. So let me actually turn off this live first, or just disconnect this, because usually I don't. Like sometimes I don't. Okay, so I'm off for that. But yeah, I'm out. Thank you all for joining. Hold on. Yo, Javi, the world is yours.